Hello and welcome everyone to the Closing Bell Show, where you can invest with the best. This is the home for busy people to learn with other successful investors, navigate the macroeconomic climate with confidence, and receive undervalued stock opportunities without having to spend hours researching. If you're enjoying our content, be sure to check out our full content library at gems.closingbell.co. This week, we talked to Rihard Jarc. Rihard is a finance expert, entrepreneur, and has a passion for technology. He founded and sold 2 startups. He's worked as a portfolio manager at a large bank managing billions of dollars for high net worth individuals, and he now runs his own investment fund and writes for his Uncover Alpha Substack publication. In the chat, we dive into the metaverse industry opportunities, Meta as a company versus TikTok, and the battle for audience and user engagement, and how much it will cost to fuel the metaverse.
Rihard, it's awesome to get in touch with you. I've been following you for quite some time now on Twitter. You've been doing a lot of stuff there. You've been writing a lot of great articles. I thought we could start this whole thing with just a little intro, the ABCs of Rihard. Maybe you can give us your little background, and then we can jump into the different segments of the show. The first being some fun games that Natho will do. We'll talk about some macro-related questions. Related specifically to the metaverse. You recently did an article on that, and then we'll talk about some stock-specific opportunities. We'll break down Meta, another article that you did in your Substack. So I think that's the structure of the show. But I thought to kick it off for the guests, keen to know about you and your background.
Yeah, sure. So thanks for inviting me to the show, guys. So I started with investing with quite early. I would say as soon as I came to high school, I guess, I started to get interested in investing in general, more at first more at value investing, Warren Buffett principles, stuff like that. So I went to work. I did my first job. I was an auditor at one of the big 4 companies. So auditor, intern, whatever. There I learned basically how to kind of analyze financial statements, cash flow statements, etc. And then I continued my career and went to work at a big bank. So I worked there as an portfolio manager. Was there for several years, and after that I quit my job and basically started 2 startup companies, not at the same time, but similar, both in the software space. So I kind of added to my, let's say, know-how of financial statements and the economy in general, also with the understanding of software, how businesses are run, what kind of products you use, etc. And now I basically run my own. With my partner, we have an investment fund, a small investment fund, and I also write, as you said, analysis on my newsletter of different companies that we are interested in, and it's mostly tech companies and more in the, let's say, kind of growing tech companies, or in some field that is very, very, very high growth in the future. So yeah, that's basically my background. As I said, I started with investing early, and basically throughout the years have kind of transformed from a value investor to more a growth investor or technology investor.
So you're very much like a self-made man. How is that knowledge and whatnot? Out of curiosity, what's the 2 software startups that you built?
Yeah, so on self-made, I went to I have a degree in economics in finance. So we also learned, of course, at school some basic principles, but mostly it was self-learned through different books and working in this industry as well. Sorry, what was this? What was the question again?
And then just out of curiosity, what were the 2 startups that you?
Oh yeah. So the first one was a marketplace for used cars. So it was basically a rating agency for used cars. So the sellers could rate their cars at our firm. We gave it a kind of Moody's or Fitch like rating, right? So that the buyers knew what they were buying in terms of quality of the car, right? So this was the first one. The second one, I sold the first one already, and the second one is, it's basically an AI text recognition software, so SaaS as a service. We extract data from invoices, documents, bill of landings, etc., and put it into an ERP system or CRM system. So we're kind of text reading, understanding the content of a document. So you take a picture of a document, and our software analyzes which is the date, which is what content it is, what the thing you are buying, if it's an invoice or whatever is, and what's the price, stuff like that. So it's basically an AI document extraction system.
Wow. Yeah, fantastic. Luca, do you have something else to add before we jump into the games?
No, I was just going to say, Rihard, that you switched your investing strategy more to growth over the last couple of years. I was just curious how you have found that switch, particularly after this COVID, bull run, but then also everything kind of changed pretty quickly. Are you starting to regret that strategy, or is this you're in for the long term?
No, look, I've been kind of tech investing way before the 2020, right? So it's a journey I have been on for the last at least 5 years. And the difference maybe between me and in general investors in growth, I tend to focus more on quality. So that means that I never had let's say over a percentage of my portfolio in companies that were in the over 20, 30, 40 times sales or whatever, right? So I always kind of preferred companies that still make sense also on the valuation point. So I'm not like growth at any cost. I'm more like quality growth. But still, the switch happened because in the long run, I understood and saw that if you can manage the downturns, your upside is higher with quality companies. With companies that are growing, not just companies that are spitting dividends. Of course, it's a strategy for some, but if you're young, if you have a long-term horizon, and if you can quality pick the right companies, the growth strategies tend to perform much better than normal value strategies. Because Warren Buffett and although he's still a genius and all, back in the years like 30, 40 years ago, there were more opportunities with the intrinsic value being so low, with the balance sheets full of cash and market caps under cash. Now the market it's so effective in terms of algorithms. So many people are investing. It's hard to find some company that is down because the market has missed it, right? It's really a long shot on this. And on growth, I think it's more like, what does the market expect? And if you do a quality analysis of a company, if you know the company well, if these presumptions are correct or are they undervalued, right? Because some trends seem in the last year seem to be very undervalued, right? So people kind of underestimate like platform companies because they only see the things they sell now, not the things they could upsell to their existing client base and stuff like that. So I find more value to be made there than just in value investing, because in growth, and especially in this market where we are right now, right? Everybody's focused on what are the companies going to report the next quarter or the quarter after that, and nobody is thinking what are they gonna do in 2 years, 3 years, right? And should be in the stock price at least to some degree already now.
That's good. That's a good synopsis of it. So look, before we get into the macro stuff, Rihard, we have to start with our traditional light-heartedness. And In doing so, I'm not sure if you've had too many of these questions before. The friend, marry, or kill question. Are you familiar with that one?
No, not really.
So you have to select from the three names that I'm about to tell you. One
Okay.
that would be your friend, one that you would marry, and one that you would kill. So Sheryl Sandberg, ex-COO at Facebook, Eduardo Salvarin, co-founder of Facebook, and Mark Zuckerberg.
Okay. Okay. Eduardo is probably. I'm not sure why kill and stuff like that, but okay. Let's say he's in the kill zone, I guess. And then we have what? Cheryl and Zach. Huh. Well, I like women, but if I had to marry somebody, I would probably marry Zach. Cause I like him so much. So yeah. So I guess marry Zach and Cheryl becomes the friend, right?
Good stuff. Very good. What was the first investment that you ever made, and what interested you about it?
Yeah, it was Apple. I think it was 2011 or something like that, or 2012, early 2012. The reason was it fitted in the value category, but also kind of intrigued me as a bit of a growth potential. Although honestly, it was more in the value category because Apple was at the time, I think it was 11 or 12 times price to earnings. But that was the period where everybody was talking. It's just a hardware company. It's they won't be able to sell anything more, etc. So yeah, it was Apple.
It's funny. That's actually been quite a common answer, at least the last couple of podcasts we've done. Now, the third one, name one person you really admire in the investing world and why.
Yeah, I would have to go with Drunken Miller, probably. He's I think his long-term view is kind of on point, but at the same time also his kind of feeling for the short term is also very good. So and I think he doesn't get budged by any short-term volatility, etc. I tend to, like, now that I run a fund, I understand how even more harder it is to manage outside capital. It's one thing to go through a downturn when you have your own capital, right? You can control your emotions, stuff like that. But if you manage outside capital, it's a much more stressful situation, and that's why I really admire, like, a lot of fund managers that are successful and are long in this show, right? But yeah, I would have to go with Drunken Miller. If I had to pick one, I guess.
Awesome. And Alex Morris as well was a big fan of Stanley Druckenmiller.
Yeah, he was. He's got a lot of extracts from his work and writing in his reports.
Exactly. Now, Rihard, we wanted to cover something that was quite topical and something that you had written about. It's actually why we were interested in chatting with you. It was just around the metaverse. And I recently got gifted an Oculus for Christmas. And so I've been using the Oculus and trying to get a feel for what the future might look like in that environment. And I understand that the metaverse can take a number of different forms. It could be kind of that VR, it could be AR.
Yeah.
Crypto somehow has been plugged into that word metaverse, and they kind of used interchangeably now. But I thought we'd start off with those macro questions, just because it's so interesting. So Nathan, I'll let you kick off, and we can dig into it. I'm really keen to get your thoughts, Rihard, on this whole new area of technology.
Yeah, for sure. Like, as Lucas said, we both dove into all of your writing, and I think it was late last year you wrote a piece named the assets of the metaverse. Before I dive into specifics, did you end up buying any NFTs during the last bull run?
Yeah, I had some fun. with them. So
Yeah.
I look, I'm always like trying new things, just to also see how they work and what the dynamic is. But so yeah, I bought some. I think it was even deeper. I went to a fractionalized NFT. So that's when you actually when a group of people buys one NFT but fractionalizes it. So yeah, um, I had a bit of fun. Yeah.
Interesting. Is that similar to the Masterworks model, but for an NFT?
Yeah, I think so. I mean, it's how we would say it, it's on a website called Fractionalized Art. And I think it's more you can sell it whenever you want, right? So it's more liquid, I think.
Mhm.
You don't have to hold it. But at the same time, because it's so because the market has to be always there, it's quite illiquid in terms of pricing. So it creates opportunities, but also traps if you don't if you want the money right now and want to just press the sell button, it's like you can get it at really bad prices, or
Mhm.
if you buy it or sell it, right? So it's yeah, it's more liquid, so you can sell it anytime.
Yeah, that makes sense. Now, in that report, you listed a few different segments in the space, namely hardware, engines, protocols, service infrastructure providers, space, land, AR tools, digital items, software tools for creators. What areas interest you the most, and why?
Yeah, okay, so this field is still so undeveloped in terms of we don't know what the real as you said before, Lucas, right? It's still so um unknown which companies are going to lead, how is it going to look like really, right? But so far, what I'm interested most is, okay, one is my investment in Meta, because I think they have a good position when it comes to owning the hardware part, but also kind of the platform and the take rates they can do on the platform. Um, and especially on the AR front, like that's really interesting. But then the other assets, for example, I didn't mention this in the article, but it's sort of an add-on to the article, I would say, are also cloud computing providers. So even though cloud, is a field of its own, if you want to power this metaverse, you need the cloud computing providers, and more specifically, you need a lot of computing power. So from AVS, Azure, Google, if you will, even NVIDIA, right? NVIDIA with its kind of, I think it's called Omniverse platform, right? So it's a similar concept. You're gonna need a lot of GPUs and processing of images. So the cloud providers are, I guess, the most safe bet right now because they're on top, right? They're the first layer and make it so that the other layers are also there. Um, when it comes to other investments, it's uh, crypto right now is it's too volatile, right, for most people. But if you look at some of maybe the potential assets, I mentioned ENS. So this is it's like GoDaddy for kind of your identity domain. I think they can, even if Meta goes ahead with its Horizon Worlds and its own platforms, they probably still can or will use an domain that register or the identity register as ENS, because it has grown to kind of be the standard, and they don't need to own that piece and sell it. They can just use it. So ENS probably, I think I'm also interested. And then on the chip side, I don't own chip makers yet, so NVIDIA, AMD, whatever, Qualcomm. Um, just because I think they have other problems right now with the buildup in inventory. But otherwise, it's also you will need more and more chips. That's the fact, right? But the problem is here if you go directly to foundries more, or if you want chip designers, because everybody is starting to skip the chip designers. So Apple doing their own chips now, even ByteDance, so TikTok, right? They went direct to foundries. So it's a question if the chip designers will be able to have the same market if the concept of the metaverse goes off, or if the big players like Amazon, Microsoft go directly to foundries and just they feed them the chips, right? Because they will be the computing provider, so they will need the chips. So yeah, other. I also had for some period an investment in a stock called Matterport. They do this kind of AR visualization, 3D visualization of your room or apartment or house or whatever. But again, iPhone also launched this feature, and it's always a problem with big tech. Big tech, when a field becomes too interesting, they pound in it and they basically squeeze all the small guys out. So, yeah, I would say so far this one's, and I also own a bit of Ether, just because I think it's it has become the standard again for this kind of first movers in the space. So people, as we said before, NFTs and DeFi projects and stuff like that. The people are kind of they joined with Ether for the let's say standard, right? You also have other like Solana and Polygon and stuff like that, but it seems like they're more in the low end and Ether is in the high end, right? So I think Ether with its fork or whatever, when it happens, will be more competitive to other protocols. So yeah, that's kind of the overview.
Yeah. Rihard, I have a question for you, and maybe you have a view on this. With Meta in particular and their Oculus, and we'll talk about this later on as well, but Meta wants to build their own platform, so it's an owned platform. They're not renting it off Apple. They don't have to be subjected to these take rates, and they can operate more freely. With that said, there's a mindset, I think, inside Meta to own a wholly owned platform. I'm trying to ponder about ways that crypto can play a part in that ecosystem, particularly if it's a closed ecosystem. Now, it's probably different if there's a open protocol for virtual reality, something that's open source that people can use, and then plug in their different cryptocurrencies and different ways to operate and interact with each other. In the context of Meta, do you see a way that crypto or NFTs really combine with that offering, or is it something? Are they two separate things that you're viewing as being the metaverse?
No, I think that NFTs, for example, can play a role in also the Meta's vision of the metaverse, right? Because Mark also mentioned it, and I think the metaverse concept will be that the things, the digital items, stuff like that, will be owned by the users, right? So they will, like Meta will probably own, or any other big tech player for that matter, will own the kind of as we said, hardware part, and maybe like Meta owns Horizon Worlds, but the items need to be transmissible and changeable between users, right? So like NFTs are, but the problem with NFTs is I just don't know if they're a good investment, because I'm not sure they even are investments, right? So if I think they're more of a, if you buy clothes right now, right? It's similar. So Adidas does a virtual shoe and you buy it, right? So I'm not sure if it makes sense for you to buy NFT and hold it in expectation that the price will increase, right? So this is so I think NFTs will have a place in also centralized, if you will, metaverses. But I'm not sure they will be the holder of value. So maybe some projects, right? So even in today's world, we have collectibles from NBA to baseball to whatever, right? But not all items hold value, right? Or increase in value. So, but I think the concept of users owning digital items will prevail even in centralized metaverses.
Yes.
So that's where where crypto comes in a way, right?
Alrighty, so we'll probably move into the the more specific section on Meta. And this pertains more specifically to the recent piece that you posted on your Substack, Meta's challenges, the narrative versus reality. You quoted some concerns as being, namely the rise of TikTok, Apple iOS privacy changes, and the Metaverse cash burn narrative. I thought we could talk a bit about Apple's iOS privacy changes, and could you break down exactly what's happening in that arena and how significant this might impact Meta's ability to monetize down the road?
Yeah. So I think most people know by now, Apple introduced privacy changes that kind of limited the ability for apps or ad tech platforms like Facebook, Meta, if you will, to track people once they leave on-site platform, right? So once they leave a Facebook, a Instagram, whatever, before you kind of could, as an advertiser, you could target these people because you had data what they were searching after they left the platform, what websites they were visiting, etc. And now this is basically done because the thing that Apple introduced is that people have to kind of click, yes, I actually want you to follow me around, right? And most people didn't click that. And that's why the ability to track users is gone for ad platforms. And this mostly affected the platforms that were performance marketing platforms, right? So you have brand kind of platforms where advertisers just come to show their brands and they don't expect kind of results in sales directly, right? But performance platform like Facebook, Instagram, there you expect, if I put X amount of money, I expect to get X amount of money on top of it in return in terms of sales, right? And so this kind of affected the whole landscape, but mostly Meta's assets as well as Snapchat. So the one that was least affected definitely was Google, and also like Pinterest, Amazon. So if you read my last article, the intent platforms were the least affected, right? Because intent platforms are the ones that users come on with a clear intent. So I want to find something, I want to buy something, I know exactly what, right? And these platforms don't need tracking data because you already filtered yourself as a user once you came on it, right? But the performance platforms need more kind of specific data in terms of you if they want to provide advertisers with effective campaigns. So this changed now, right? But the thing that I also mentioned in the piece, and I think it's really important, is that now platforms have to turn back to what they control, and that's data on site, right? So the data they have when you registered, what you liked, what you watched on site, and stuff like that. And Meta is the one that has the most on-site data so far from the platforms, right? So Snapchat doesn't have that much data. Also, some other smaller players have bigger trouble with that. But so far, because Apple allowed this tracking, Meta kind of rode along the ride, right? And they didn't develop these internal tools to use this data. And now this changed, and they are kind of trying to catch up and provide effective marketing. But here, I think it's an important thing to mention that Meta also said that they now are focusing more on AI algorithms that need small sets of data. You know, in AI, you have machine learning as the most common concept, and the most common concepts are deep learning. So this is with big sets of data. You power algorithms that try to learn different analogies. And the field that's really rising is machine learning with small data. So this is what everybody wants, right? So some effective results, that you get some effective results from small data. And Meta is focusing exactly on that. And because of their AI capacities, software engineers, stuff like that, they're making progress on that level, right? And once they do, they have a competitive advantage versus smaller players, because the smaller players do not have enough resources to develop this kind of algorithms, at least not effectively, right? So it's a headwind right now, but it could become a tailwind for them, right? But it is important for them to resolve this issue in the following quarters, because otherwise advertisers tend to shift to other platforms like Google. For example, Google benefited the most from this change, right? And also Apple's internal advertising system and Amazon and stuff like that. So the intent platforms, but Meta needs to resolve this issue in the next 2 or 3 quarters, so that advertisers still view it as an effective platform. Because they do have the users still, it's not like the users left. You only have to figure out a different way to target those users. And you have the resources to do that because you have big sets of on-site data.
Well, I was just going to say that, Meta has a suite of products. So Facebook, people tend to think of Facebook when they think of Meta, but, WhatsApp, Instagram, I don't know, there's a few other really, really big products out there, and they're notorious for making great acquisitions, knowing which companies to buy and just putting out the cash for it. So I think people tend to underestimate Instagram as being that on ramp to the next wave of users. Now, one question before we get into TikTok specifically is just about Sheryl Sandberg. Do you think Sheryl leaving is problematic for Meta over the next 5 to 10 years, or is it indicative of what's to come?
No, I think on Sheryl, I think it would be a bigger issue if we were talking about this 4 years ago, or even maybe 3 years ago, because Sheryl was a key player when kind of Facebook was starting, was growing, because Mark was really young, didn't have so much experience. Sheryl came as an experienced manager, helped him run the business and stuff like that. So she played a crucial role, right? But now Meta has developed into this conglomerate where it's like, even if Mark has other employees helping him out, I don't think it will be it will be if we won't see the effects of Sheryl leaving, right? At the same time, one of the key advantages that Sheryl had was kind of also political connections and stuff like that. So she was also sort of in a role to handle the regulatory pressures and stuff like that. And honestly, it didn't really help. Like, in the last 5 years, they had so much regulatory pressure and Senate problems. I don't think any other tech company had, right? So, I don't view the leaving of Sheryl as key, but I would view it as key if it would be like, as I said, 4 years ago, where Mark was still more inexperienced. But also to add on this, like sometimes it's also good for some key employee to leave, because other people are maybe prepared to take the next step and kind of provide some new wind in the company, So it could be also good for Meta to kind of have a new wind in management.
Yeah, I agree with that as well. Now let's just talk about TikTok quickly. A couple of fun stats that I looked up earlier. TikTok reached 1 billion users faster than any other social network before it. It took Facebook and Instagram around 7 years. It took TikTok around 3. They also have the highest average time spent per day on any platform at around 45 minutes per day. I think that's tied with YouTube. That was also available inside your article. How do you think Facebook gets themselves out of this situation? And do you think that TikTok poses a serious existential threat to the core Facebook product over the next 5 to 10 years?
Yeah, so good question. Like first we have to differentiate why you use Facebook, Instagram, and why you use TikTok, right? This is the first key to understanding really what's going on. TikTok is mostly used for entertainment. So you go on there to have fun, to watch videos and stuff like that. And it really took off in 2020 when the pandemic hit. Everybody was closed, and your family, friends, and other people didn't really do much, right? So you didn't have any content to view from your family and friends, but so people kind of transitioned to first Netflix and watched all the content library there. But once everybody was watched all the movies and shows they wanted, they transitioned to something else. And TikTok provided this. TikTok provided with kind of funny videos from people all around the world, going viral and kind of entertaining you, right? And Facebook's or Meta's main apps so far had different roles. They were more connecting you with family and friends you also known in the real world, right? So they were more focused on that. So it's not comparing apples to apples, right? When it comes to these two platforms, but Meta especially is now going into this third party content way, right? So they are becoming more and more competitors, and as everything, when something draws so much, as you mentioned, right, 45 minutes per day users spend on it, when something draws so much attention from your day, and it's also a digital activity, it is something that Meta should be focused on and mustn't must compete with it, right? Because in the end, it can become really easy for TikTok to add more social features and transform from just a digital platform to basically fans, family, and third-party content, right? So this is what Instagram is now trying to do with Reels and also Facebook. So it is a threat, but at the same time, I also think they have acknowledged that and have proper answers to this problems that TikTok presents.
Yep, absolutely. And it's interesting now that, as you say, that there's emerging of the products. They had Snapchat came out with stories, and then Instagram had stories, and then TikTok came out with the reel, and then Instagram comes out with the reel, and so does LinkedIn Reels and Twitter, whatever, all these different platforms. It's hard, but it's hard to see a world where the entertainment factor isn't the primary factor now moving forward, because connecting a family and friends has been done to death. And I think actually people are moving away from social networks to more micro networks in WhatsApp and Messenger and things like that, and trying to remove, like, one of the big things that I do is I remove the Facebook Events app and Messenger app outside of Facebook. So I've killed the Facebook app, and I just use those two things separately, because I only needed to message people one-on-one and do events. So I think that's where Facebook's product also gets eaten from the inside out, is like they've got so many features. You only need like one or two of them. And then you have, you might use Instagram to message people, like, and use groups, Instagram groups and things like that. So anyway, Nathan, I thought I'd pass over to you if you had any other questions. And if not, we can move on to the last part.
Yeah, for sure. No, I think we can round things out now for the metaverse, and I guess address the somewhat of the elephant in the room, and mainly what you feel the speculative spend of the metaverse might look like over the next few years.
Yeah, so when it comes to spend, that's probably, as we mentioned, TikTok is probably number one reason why the stock is so down. The second would probably be the metaverse and the spend, because people are, when somebody says, I'm going to spend 10 billion per year on this metaverse concept, investors, first thing to come in mind is the profits are going to be lower, right? And this is also the case with Meta. But at the same time, the last quarter, Zach mentioned this, right? And was quite clear that they do not intend to spend more than they make in profit. So they don't expect this portion of 10 billion, if it's 10 billion right now, to grow and to not kind of be managed with how much profit they make. They also mentioned that they're going to leave the profit to grow still, right? So the profit from core apps, they still expect to grow even though they spend for the metaverse, right? So they're quite flexible with this, and I think they understand this because, especially in this macro environment for stocks, if you're not focused on profitability, you get hammered. So
Yes.
investors should understand that it's not a wild goose spending on the metaverse, but Zuck and the team said quite clearly they're gonna control the costs and not if it goes too much, they're gonna reduce them, and they already did this. You could see in a few releases that they're kind of pushing back on some product releases when it comes to VR and AR, and they're kind of quitting some teams and using the resources for other parts of their business. So you can see that they already are controlling the costs. But at the same time, I think the era of big tech spending only on buybacks and dividends is over. Like, if the metaverse concept is really the next big computing platform, which, let's just mention, Meta is not the only one that sees it this way. You have Microsoft, you have Nvidia, you have Disney, all these CEOs talking about AR and the metaverse being the next computing platform, right? You want the big tech to spend and develop this field and be there when it's necessary, right? So you don't want them just to provide these buybacks because, yeah, it worked for 7-8 years, but financial engineering can only go so long. It's not like once something new comes, you can easily become old tech, if you will. So I, as the shareholder, actually want to hear the following. I want to hear, okay, you're spending on the metaverse, which is the next computing platform. Great. I want you to prepare for the future. At the same time, I want you to say, we are going to control costs and not hurt the profit from the core products, or at least make it so that the profit can still grow. And they acknowledge that. So for investors, I think it's quite clear they're not going to spend like crazy on this concept. But yeah, it's always a talk about timing. The biggest risk, I guess, here is if Meta puts so much money and develops this concept, people get familiar with it, and then Apple comes in and basically takes the market, right, with its first or second product. So this is the real thing that Meta also needs to watch out. Right, they're really open, communicating with PR about this metaverse because they want people to understand it and to become users. But at the same time, they can also risk of timing it too soon, right? So this is the kind of balancing act they have to do, together with all the challenges they have with TikTok and Apple changes, right?
In closing, a curiosity question. In the broader scheme, do you see there being any particular dangers with this sort of unbridled move into the metaverse?
I think for Meta it was a necessity, right? You see what problems they have with Apple because they control the hardware ecosystem. So Apple controls the iOS ecosystem, and we can see that they're really not so Meta is not in control of their fate, and that's a problem. At the same time, you have Amazon, Google, and Microsoft, which are already ready for the next era because they have cloud computing platforms. So even if the metaverse takes off, Amazon, Microsoft, and Google will benefit because they own the cloud computing assets. So Meta, if they want to join this party, either you go cloud computing, which is already too late, or you get ready for hardware with AR, VR, and kind of controlling the hardware part, right? So Apple, Meta, and they're probably the ones that will have the most fights in terms of this field. And the other three guys are just probably going to focus mostly on cloud computing because they benefit if this thing goes off, right? So Meta needs this, right? Because they don't want to be just an portfolio of apps that has no control over their fate to some extent, right?